He has sat through several economic shocks as a former director of research of the government parliamentary unit in the early 90s, with unemployment at the time 12% and the economy minus 2%, with government debt sitting around 70% of GDP. Of course, then to go on and watch John Key's government manage the GFC, borrowing $60 billion during their time in government. So I'm excited to welcome to Sarah's Country to break down in a factual way for us what last week's budget means, and by comparison, how is this downturn ahead going to look? Welcome to Sarah's Country, Chris Simpson.
Hi, Sarah. Hello, everybody.
Thank you so much. So now, firstly, Chris, I really want to thank you for the layman's terms commentary that I follow on LinkedIn, and I know a lot of other people do, from your experience and, of course, the reports that you currently do now to your investors at Templeton Group. But firstly, what parts of the latest monetary policy moves from both Grant Robertson and Adrian Orr are you not surprised by and surprised by from the last week?
I think both from a monetary and a fiscal policy, Sarah, where I'm genuinely surprised is at the speed in which they're moving. Sort of previous economic shocks, the movement was a lot slower than what it has been today. And I think that's something that New Zealand and New Zealanders can take with some comfort about what tomorrow will look like, just the speed of what's been happening.
Okay, so let's go back to those days we just spoke of that 12% unemployment and the 70% government debt. What was the sort of general feeling in those rooms at the time around what needed to be done, that big action that needed to be taken, but with full responsibility at the table as well?
Yeah, and without breaking confidences, because I was a secretary to the Economic Caucus Committee back in the early 90s, and sitting there, and it was particular around the Ruth Richardson Black budget. And then by about 1992, we weren't seen to be acting fast enough, and so the Bolger government came in with 50% in the 1990s as a poll, and by 1992, because we weren't seen to be acting fast enough, we were down at 16%. And of course, and you had to win an election the following year in 93 to go from 16% to 34, 35%, which is what they won the election at, required a lot of economic focus. So it did actually become all about the economy. But it was almost 2 years of behind the eight ball of what are we actually going to be doing? And that really slowed down the economic response.
What do you believe that we've got enough learnings from these times and resilience to be able to put things in place faster?
Yeah, absolutely. Because the learnings since the late 80s right through to today, they're sort of erring on the side of caution and speed rather than just waiting for the official statistics to come through. So even for somebody like me, and I sat there as the general manager under Don Brash and John Key at the New Zealand National Party. John wasn't elected the Prime Minister until 2008, and his first budget wasn't until May 2009, nearly 8-9 months after the GFC was in full swing. So there was another lag for the government to do a sizable response. And John's sizable response, including the Christchurch earthquakes, was 60 billion, because he took net debt from nil to 60 billion, whereas Grant Robertson inherited net debt of 20% after John, and they've immediately put in 50 to 60 billion straight away. So again, the confidence is the speed in which both monetary and fiscal policy is reacting at the same time, but coming off a very strong economy. Whereas in 92, when I was sitting there as a junior, as a researcher in the Economic Caucus Committee, the unemployment was massive. There was inflation. It was really dark days. So it's quite the opposite today, where it was very strong and with incredibly strong and fast response to this current economic crisis.
I was a young child watching my grandfather lose our family farm, Chris, to the Clyde Dam, the raising of Lake Dunstan. And we had the privilege of taking the Bolgers to across the lake and what was a sort of very sort of ironic time for our family. That was a huge period of infrastructure spending under those particular governments. We're talking about infrastructure pulling us through again. What's different from then or similar?
Well, so prior to that was infrastructure around Think Big, and then what happened in the mid-90s, there was a lot of asset sales. So this government's not talking about asset sales. So there's a lot of asset sales to offset debt, and then by the mid-90s, we were coming out of the recession through asset sales, and with new money, new capital, and new ideas coming into New Zealand about how to do things better, smarter, faster. So that's the big difference that we're not seeing now, that we're not seeing that sort of response from how do you bring new capital around? Is there opportunity to invest into organisations that the government may own?
Okay, so on that, well, there's a few different parts to that, but of course, one was James Shaw said that we have a very narrow tax take, and those who profit from COVID will essentially pay off this debt. We're talking to an audience here predominantly of the primary sector, who we're putting our hat on for that export value. So how do you believe that we can nourish and nurture that sector at the same time as being able to manage this government debt?
And that's a good question, because my father was a dairy farmer and my brother's a dairy farmer, but I wasn't quite built to sort of get out of the Land Rover to open the gates. I gave up my dairy farming from there. The way out of this really is focusing on competitive advantage and focusing on the factors of production of land, labour, capital, and leadership. And land from a primary sector. How do we make sure that the likes of New Zealand Trade and Enterprise and Ministry of Foreign Affairs and Trade are opening up the markets for what we produce at the primary sector? And so that's where the real focus needs to come fast from this government, because we are lean and we're mean, because we've been through all these tough times, but we need them out there really supporting the primary sector. So I'd expect more from MFAT and NZTE to be supporting, again, the people who are currently carrying New Zealand, because tourism is not carrying it.
Do you worry about the levers getting very slim now from a monetary perspective with the Reserve Bank and something that's unprecedented times of movement with the OCR?
Yeah, because basically getting to a situation from a monetary perspective that we're in competition with the rest of the world, and the rest of the world is all there with low interest rates. So it then comes back to focusing on where your competitive advantages and focusing on where government should be pushing really hard around the exports of what we're doing. So not so much sort of, travel around New Zealand, see your own hometown first. It should really be spending a lot more into that primary sector and selling what we're doing and what we're producing. That's the real opportunity.
Absolutely. Thank you so much for taking the time to join us. I knew that you were going to be some little pearls of wisdom, Chris Simpson. I'd love to have you back on the show as well. I know our audience would have certainly loved some real depth. Is there any particular passing messages that you'd like to get out to our farming business owners, agripreneurs, as we call them, to sort of stay through this time?
I think because we're right at the very bottom or near the bottom, now's the time to be investing in their own marketing and pushing who they are and what they're doing. So it really is double down on, for want of a better term, your own public relations, your communications, your marketing, and getting those messages out there so that the world sees them. So that's where I'd be doubling down on.
Couldn't agree anymore. That's Chris Simpson from the Templeton Group and his rich experience in the economic research units there through a lot of those governments through the tough times of the late 80s, early 90s and recovery.
This is Sarah's Country.